Hey guys, yes, so Dow, I did a detailed clip for my premium guys. This is going to be just a quick flyby for free view. I did say I'd do one, so I will, and it's top line for you. It's going to overperform to the downside, and all likelihood is the probabilities are high. In fact, there's someone who's got stats that where you close more than 1.5% down on Friday, it's almost a 90% plus likelihood you'll make a lower low on Monday. That doesn't have to mean you close close lower than the close on Friday, but this is an ugly sell-off, and it's the first inverted HVF in a new trend. We've gone into detail with our premium guys on a webinar tonight for an hour and a bit, and we were covering it in far more detail with them, but this is just to give you the overview. Here you go. We got a massive up move. It's been a one-way bet, funded with banker juice and leverage, and up she goes all the way since 2009 lows, which, wait for it, aren't even there. They're way lower and way lower and way lower. They're right down here. So since that point where you could have got in at 6,500, you've traded right up at 26,500. So you put on 20,000 points on a 6.5, and it's been pretty consistently bull. There was a bit of a choppy period here where if you called head and shoulders, as we were attempted to do and did, you ended up getting killed. In other words, reversals are not the game, and we generally avoid it, but it was somewhat tempting. There was a sell-off there, a high right shoulder, but another very big sell-off back down to these levels, and it just got killed. It just kept smashing it. The leverage, they're all high on the hog. They're all borrowing like hell and buying their own stocks back. Margins at all-time highs. So this is why this one can get ugly. And this is the first inverted. This is the most powerful reversal. If you're asking for a reversal, I'm not so interested in head and shoulders unless we have HVF method in them on a right shoulder. Many times you'll get something that looks like head and shoulders structure like that. And what does it do? It goes up. Everybody sees the head and shoulders that work, like this one on an eye, and nobody ever spots the countless times you get a left or perceived head and then a right and you go up, and it's a classic case. You'll get more wrong than you get right, and you'll lose often more. You won't often have much ammo left by the time you get to the cyclical highs where you get a really long move. So having a method that truly puts you in the real event changing, people don't realize that this one's going to go for a bit. It's going to go for some bit. So much so that we can't even tell you targeting wise. I've given some ideas how we'll manage for it in our premium group. We have a particular methodology for doing exactly that. We'll close something at our target, which I've not detailed in this chart, but you can find out more about if you're interested in learning about the method. But yeah, this is down, and this is brutal selling. That was a weak return move. You've broken a kind of a grind line there. Weak return move gets smacked. That is ugly. 25,000, and next thing you know, you're at 23,050. So very ugly. This sort of selling doesn't tend to stop on a dime and then just reverse. It's expanding. It's not yet had that super accelerative candle like that. So if that comes on Monday, it'll be an ugly start to the week. So if you haven't already got your shorts, it's probably getting a touch, not late. You shouldn't chase markets is my advice. You don't know where and when it might happen. There was a nasty gap sell-off, and you should be tucked in, and ideally you should have been short. HVF method guys will tell you would have been short up top at the latest point there, and possibly even early on the return move for an early entry. Why? Because these are high probability and a beauty queen, and you don't know what a beauty queen is if you aren't trained. So this is a high confidence one. That doesn't mean I'm 100% going to be accurate. There's no such thing. This is an on balance of probability, but the probabilities are exceedingly high here. So you're going to have overperformance to the downside to 22. This is your chart. This is the Dow. Expect the news to be all about the equity sell-off, and it's going to be interesting to watch what happens to the crypto markets. That is a busy chart. Check that out on a 1 hourly, and you can see how we're looking at Bitcoin. So what you want to bear in mind is these Dow sell-offs can become very brutal. And in fact, this is a point of acceleration here on a 15-minute chart. So how's it going to lead into the main economy? I think there could be a lot of unwinding of leverage required, and this is going to be pretty darn ugly. So we've seen Bitcoin unwind from 19,000 to the lower part of 6,000. It's a higher volatility asset. You've now got, we're now rolling into the mainstream traditional market equities that have been high on the hog unwinding, and you know, you can't say it's going to be the same percentage because it didn't go up at the same rate by the same much and the same time frame, but it's been going up for a very long, it's kind of like a slow motion Bitcoin. It's been going up for a very long time without a very serious correction of proper scale. And you know, you could be looking at the start of something that's going to throw out a shocking number. So in terms of our overperformance management, once we've locked in at a certain level at our target, we're going to have our overperformance bands that will keep us in the trade indefinitely until such time as the rules are broken, and that just means we get kept into the trade. And a trailing stop doesn't do that for you, because it's going to get volatile and it'll chop up and then it'll chop back down, and you'll be shaken out. So method. But anyway, that's the take, and this is going to be uglier than people suspect. And this is because of the quality of the method and the confidence we have in it, and this particular pattern is of very good quality. Okay, that's my take. It's a biggie. That doesn't mean it's down to 10,000. Doesn't mean that this is the financial reset that you're busy looking at. But there will be some potential heavy losses taken, and if there's some responsible action that is taken, which on the way up, which almost is assured, there could be a contagion effect as a result of that. So let's see how it pans out. A summer of discontent for the bankers and the investment community. What will it do to the crypto markets? What will it do? Can we get an inverse correlation, or will we have contraction there too? Because if it's pain for people, it's pain for people everywhere. Who knows? Let's see. Okay, speak to you all a bit later. Keep well. And by the way, oh yes, final thing, free webinar, 29th of March. So if you'd like to hear more about what we do, the 7 key mistakes traders make and the 3 great gifts that you have that you're not exploiting. And on top of that, there'll be an offer for the serious people determined to improve their trading and seize the opportunities and to be making money when many people are losing, as we did on our Ethereum USD shorts recently, when everyone else was getting their backside handed to them in the crypto sell-off. And as you could be doing right now when all the bankers are sweating and having to close long positions and losing money. Isn't it nice to be on the other side of their trade? Okay, speak to you soon, and you know what to do. Go to the website www.themarketsniper.com and click on Get Started. We'll see you on the 29th of March at 1900 GMT. Enjoy.